Hey Jacob,
Hey guys, how are you doing?
good. I'm Aaron with Kingsdale, and this is Ryan here. So that's who you've been communicating with.
Yes,
So basically, we've got everybody else lined up, and this will be recorded for agents that didn't attend now. So I'm just gonna give the floor over to you. So this is Jacob,
perfect.
everyone from Finmo.
Um, hey everyone, thank you for taking the time with me. I'll run you through the basics of Prosper. I assume that nobody's been given any information so far, right? Perfect. Um, so to start off, Prosper is a product of Sun Life, similarly to MPP being the product of Manulife. However, there are some key differences between the two offerings. As you know, MPP is a creditor insurance, which means that it is directly tied to the outstanding balance and the mortgage contract, which means that as the borrower is paying off their mortgage, the coverage keeps declining. So this is not the best solution for the borrower because they pay the same amount of money each month for something that decreases in value, eventually going to zero. Sun Life did have a creditor offering before, but they scratched it and they tried to look at the mortgage market from a different perspective. So they created a unique type of term life insurance. And why I say unique is because it is very, very flexible. So
Hi, Jacob.
usually,
Sorry to interrupt. Can you put this on full screen? I'm just seeing like a small screen here.
is it any bigger?
Yes, yes, yes.
Yeah, I'll try to make it bigger. You tell me when.
For
Is it
now, it's
good?
perfect. Yeah, it's perfect.
All right, all right, all right. My bad. I have a very large screen, so I have it split. Um, so yes, and please do not um, feel free to interrupt me at any point if you have any questions. I know this is very new. So yeah, fire away. All right. So as I was saying, it is a unique type of term life insurance offering high degree of flexibility. What I mean by that is the term, for example, usually with most of the providers, you will get 10 a 20-year term, whereas with Prosper, they offer terms that range from 5 to 40 years. So it is really flexible as to how the borrower wants to set it up. And they will always work with them and try to tailor a solution for them based on their needs and budget. Uh, so this resource library contains quite a few things, tools and documents that come in handy. But first, let's start with some of the restrictions. Um, similarly to other solutions, Prosper also have a cutoff threshold, which is 60 years of age. So if you refer someone after 60, they can and will be serviced, but you will not be compensated for them. Just a thing to keep in mind. And Quebec and Manitoba are off limits due to regulatory restrictions in those two jurisdictions. The last prerequisite is client consent. So obviously you need at least a verbal client consent um, for you to be able to refer the client. Now, here's the True Resource Library. This is a client form. I'm going to show you what that looks like. So this is a form you can send to your borrowers when discussing Prosper. So it's an alternative to the form that you sent with MPP. Now, I don't know who's going to be able to answer this, but when it comes to MPP, is it a compliance requirement for the agents to be paid?
Yeah, I,
Maybe
I assume that for all of it, you have to submit a form for any sort of payment.
Okay, so you either waive or they accept the MPP, yes? All right, I'm going to
Yeah,
assume that's
exactly. Just
yes.
the same as, yeah. with everything you waive or you sign, and the agents would be on the document that you sign.
I see. All right. So this would be an alternative to it. I will ask the broker owner if this would be accepted, but I think when I sent it to him, he said it would. So this document basically goes on and describes the difference between mortgage protection, as in traditional creditor insurance, and term life insurance. So the main three benefits are term life does not decline, stays the same throughout the entire period. The borrower is able to choose a beneficiary, so the lump sum doesn't go directly to the lender. They get the payout, so their family. And once the payout is received, the beneficiary can actually use it as they see fit. So they don't necessarily have to use it to pay off the mortgage. They can use it for whatever expenses might be arising at that point. Now, this page describes all of that. Their motto is Prosper protects you, not your lender. And then here is the pricing breakdown. So the pricing is one of the biggest advantages of Prosper. This is an estimate for a 30-year-old individual, non-smoker with a 500,000 in mortgage. So MPP would come somewhere at $77, 77 to 80, and Sun Life for a man it would be 46, and for a woman it would be 34. So on average, general rule of thumb, it is about 45% cheaper. Generally speaking, creditor policies are very expensive. So this is one of the best sellers with the clients, or best selling points, is the low monthly premiums, especially with young borrowers. The discount will be extremely large because MPP does not go that low with the monthly premiums with the young borrowers. Now, any questions in terms of what we've covered so far? Because I feel like I've been on a monologue. No? All right. So there's a high degree of flexibility when it comes to offering Prosper, because as you know, with creditor insurance policies such as MPP, it is quite rigid. Since it is tied to the mortgage contract and the outstanding balance, there's very much leeway where it can move. It can go to 75 and 50%, I think, but those are the only two thresholds that they do. Whereas Prosper's flexibility is absolute. So it doesn't really matter what the mortgage amount is. Their concern is more with what the borrower situation is, what their need and budget is. So based on that, they will try to tailor a solution for them, which allows, alongside with the low monthly premiums, for a quite high conversion rate. Now, the conversion rate is about 30%, and you get compensated on each borrower converted, which is $850 per borrower. So it's a flat fee. It doesn't matter whether the monthly premiums are $20 or $50. You always get $850 per borrower. Most files get $1,700 payout because there are usually two borrowers per file. Any questions about the compensation or the pricing? No? All right. The last page is just the client consent. So basically they can check yes or no, and then full name and signature, and that should be good for your compliance. Now, is it safe to assume that all of you are on Finmo?
Yes, we are all on Finmo. Every one of our agents is on Finmo, yeah.
Perfect. All right. Then let me hop into my Finmo account and show you how to actually make the referrals. So if you go to your deals dashboard, let's select a submitted file. So that is Tyler. And then you hop into compliance, click on insurance, and it will bring you down to the Prosper section. Now, here is what it will look like once you have filled out the minimum number or minimum information requirement. So you need to have the name of the borrower, their email address, phone number, address, mortgage amount, and the agent on a deal in order to be able to make a referral. Now, once this opens up, you have to select yourself as the referral agent and then refer borrowers to Prosper, and then just send a referral. That is it. This will always be present here, and that's the resource library that I showed you earlier in the beginning, so you can always access it from here. Now, once the referral is made, I'll show you where you can track your track the progress. So in the deals dashboard, if you scroll to the right, or if you have a large enough screen that shows you all of this, then Prosper referral status will be here. And it basically tells you where in their funnel the borrower is. So if you click on it, it will show you all the different deal stages for that the borrower will go through. So outreach in progress, borrower not reachable, offer in progress, not moving forward, and policy placed. Now, borrower not reachable happens about 20% of the time when the second step isn't followed. I'll show you what the second step is in just a bit. But once the policy has been placed, you will get paid the next month. So you don't wait the 90 days as it is with MPP. It is paid at the end of next month. I think this is pretty simple and clear. So let me just go back to the resource library. Now, the second most important thing to do once you make a referral is use this booking link. So if you have your clients on the phone, it looks like this, or you have them physically present, you can ask them when it would be best for them to meet with Prosper. Because if you don't book them, Prosper is going to reach out within the next 24 hours, and it will be a random call. So a certain part of the borrowers sent to Prosper, they tend to not pick up because they think they either cannot the first day, and then they think it's a spam, or whatever reasons, they might just not be able to pick up. So this booking link ensures that the borrowers know exactly when to expect the call, and they know it is at their convenience. So they're either able to choose it themselves if you send it in an email, or you're able to book them right away when you're making the referral and have them with you. And yeah, that's the two-step process. I will send a follow-up email where I will describe the process again and share all the links that I've covered today with you. The last thing I would cover today is this. So this is an external way to make referrals. Your brokerage has its own referral link, and this works for situations when you have clients that are not in Finmo. Maybe you still have them in Filogics, or it is a private deal that you don't put through Finmo, or it's just someone that is interested in life insurance. You can always refer them through this link, start a new referral, and then you click yourself through the process. It is very simple. So just give your name, then deal number if there is any, then your information as in name, email address, phone number, and then you give the client information the same way, and then just the mortgage amount, and that's it. So it is very intuitive. Even if you do the referrals this way, then it is essential to use the booking link after. And I mean use it, you can also send it to the client via email. One thing to remember with this link is that if you have two borrowers on a file, you have to do it once per borrower. So you have to go through it twice. Okay, now that is pretty much it. Couple of most successful strategies that I can share with you. Well, first of all, it's the booking link. So we introduced it about 9 months ago, and it has changed the conversion rate by about 30% overall. some brokers experience 50% increase because many of their borrowers would not pick up. But once this booking link was shared, it was much easier for them to connect with Prosper. And the most successful strategy in terms of sales, if you have clients that took MPP in the past, just offering them this option, you don't have to sell anything. You can just tell them, hey, I have something that will provide you with a more wholesome coverage because it is non-declining and might lower your monthly premiums. It's just an option for them to explore. About 85% of the clients sent to Prosper that have an existing coverage with MPP converted within a week or two. So that has been the most successful strategy of my clients so far. Pardon me for sniffing. The allergies are hitting me like crazy today. Anyways, this is it. You have a couple of email templates right here. So you can use them in different situations. If you want to work your database and kind of mine the previous MPP clients, this is an email that can help you. And then you have a couple of other emails, such as introducing Prosper before referral follow-up and after referral follow-up. So really different templates for different situations, just to make it slightly easier for you. All right. You're a quiet bunch, but I'm going to ask last time. Any questions?
Yeah, thanks, Jacob. That's quite good. A lot of information there.
I tried to pack it up, but in the email that I will send to Ryan, I will outline the process again. I will share all the links that I covered today, and I will also include my personal booking link. So if any of you want to hop on a one-on-one call where we just discuss any particular details, feel free to just book a meeting with me. I'm more than happy to assist.
Yeah, excellent, Jacob. That's awesome. Once you send that to Ryan, then we'll send that out to all of our agents. And yeah.
Will do. Perfect. Well, it was a
Thanks.
pleasure speaking with the group.
Does
And
anyone have any questions for Jacob right now? You want some clarification on anything?
Yeah, sorry. I always have questions, guys. Sorry.
absolutely.
So this just covers the mortgage?
No, so this covers anything the client wants to set it up for.
So they could
uh,
increase it to, let's say you have a $500,000 mortgage, you can increase it to 750 or 1 million or something like that, or
absolutely. It can go up to 25 million.
so it's straight up like a term insurance.
Absolutely.
Okay.
They just what Prosper is, they were created to focus on mortgage borrowers. The only difference between a term insurance with Sun Life, for example, because Sun Life doesn't offer this product either, or any other provider, is that most of the providers will offer 10 and 20-year term, whereas Prosper's term is very flexible, anywhere from 5 to 40 years. Any other questions? Hit me up. I mean, that's what I'm here for.
Another question then. What
Please.
what makes Prosper stand out to other mortgage insurance or term insurance?
Other term insurance, well, first of all, they are about 10% cheaper than most of the other providers because they're trying to penetrate the market at the moment. They're kind of the new kid on the block. And when it comes to mortgage insurance, well, it's just a better product for the client if we're not even taking into account the pricing, because it is non-declining. So declining coverage is something you're paying for your car, but it's kind of falling apart while you're paying for it, right? Because you're paying for a coverage that it keeps declining with every monthly mortgage payment, and you keep paying the same amount of money. So that's not really the best deal for the borrower. So the non-declinability, I would say, or that is probably the best seller with the borrowers, because many of the borrowers nowadays already know that what MPP offers is a declining coverage, and that's why they're not that interested in it. So when selling to when positioning the product to the borrowers, the non-declinability is one of the best selling points. The ability to choose a beneficiary and use the funds as they see fit is also a large difference between what other mortgage insurance policies provide, because they are directly paid to the lender, and the family of the borrower does not see any of the funds. Does that answer your question?
Yes, thank you very much.
Absolutely. Anybody else? Or another one from Jeff? No? All right. I mean, you guys have the recording, right? So
Yeah.
if
Absolutely.
you,
Thank you very much for your time, Jacob. And we'll get all that material out to our agents once you send that.
perfect. Well, it was my pleasure meeting with all of you, and I wish you a great rest of the day and a happy hunting.
Yep. Thanks, Jacob.
Cheers.
Bye. Bye, everyone.